Good morning. It's Friday, February 3rd, and I'm starting to gather information to pay my taxes this year. And last year, I paid a lot of money in taxes because I had some capital gains and some properties that I was able to unload at a very nice gain. And now I'm looking at this new tax law that might be brought into our lives, something called the Billionaire Minimum Income Tax. And this is a tax that's going to be collected on unrealized capital gains. Now, I don't think that that's fair, and I can tell you that one of the first jobs I had after graduating from college was as a New York State tax auditor. And I was assigned to the west side between 14th Street and 36th Street, something like that. Now, these were small businesses, but they were very clever. They were run by smart people, and they used the tax laws properly. They didn't do anything illegal, but when you are running the business, you can take advantage of many things that your employees can't take advantage of. And I'll tell you the story about this family, father, mother, and son, who were operating a small hat manufacturing business on the west side of Manhattan, somewhere around 23rd Street. This was not people stealing or doing anything illegal. Since they ran the business, they had the right to pay their employees certain ways, or not pay them, but give them expense accounts or things like that, and so it didn't count as income tax. The father, the son, and the mother all worked in the business, and the son was making $7,500 a year at that time, and the father was making $1,500 a year, and the mother was making $1,500 a year. That's what they were getting paid. Well, it turns out that their tax dodge was the use of expense accounts. The parents, whenever they wanted to do something, they used corporate expense accounts. They didn't take money out of their salary. They had no salary, basically. So you see, small businesses and people who own their own businesses can make a lot of money and avoid paying taxes, legally avoid paying taxes. Now, the tax auditors are pretty smart, so you can't overdo it. You have to know the measures, the percentages, the proper amounts, and the valid excuses that you can use in order to get away with these, I'll call them, tax dodges, for lack of a better term. I tell you this story to illustrate one of the reasons why I am against this new billionaire tax situation. Because we have many tax loopholes in our system right now that need to be closed. And we have 170 some odd business exemptions that have been around for 100 years, and they ought to be eliminated. Not all of them, but many of them should be eliminated. Instead of trying to tax multimillionaires and billionaires a certain way, we should be looking at revising the tax code so that exemptions and things like that are gone. And we should also look hard at the tax cut that President Trump put in place when he cut the taxes from 35% on businesses down to 21%, when there was no reason to do that, because businesses weren't paying 35% anyhow, because of all of the exemptions and everything that are in place to protect them. So we're talking about this billionaire's tax that is going to tax people for unrealized gains and things like that, which I think are totally unfair. Because when you take the opportunity to invest, you hope you're going to make a sizable amount of money, or maybe you're investing to make a fixed amount of money every year or something like that. You're not looking to make a gigantic killing all the time. time. Biden wants to mess with your capital gains. And this Billionaire Minimum Income Tax rule, or whatever they want to put in place, is a 20% tax on the unrealized capital gains that you have accumulated. Now recognize the fact that I don't think anything is a capital gain until you have actually removed it, when you've actually sold something and you've got money in your pocket. So I think it's totally unfair to tax something that might be up this week or this year or this month, and then not have the reverse happen when it goes down. So let's say in the beginning of 2022, I had a stock that went up 20 or 30%. And then at tax time, I had to pay a capital gains tax on that. And I didn't really take out the money. But when that stock tanks, am I going to be allowed to deduct that so-called tank when I really haven't realized that either? I am willing to bet you that that's not how this law is written. You're going to have to pay the tax when the stock or whatever goes up, but you're not going to get the deduction when this thing goes down, as far as I can tell. So these unrealized capital gains, they're not real. They're not real. They're on paper. So how would it work? So right now, you pay capital gains taxes on any profits you make from the sale of an investment. And how much you owe depends upon your income and how long you had the investment before you sold it. Because if you sell that investment on a short term, which is less than a year, I believe, then you'll pay a short-term capital gains rate, which is the same as your ordinary income tax. But if you waited a year or longer before selling it, then you pay the long-term capital gains rate, which should be anywhere from 0% to 20%, depending upon what your income is. Most Americans don't have to worry about this situation. The only victims are those who are worth $100 million or more. This plan is ridiculous, because it puts people in a situation where they have to have money to pay on gains that they didn't realize. That could be thousands of dollars that these people don't have in their pockets. And then, of course, there's a time if you pay and then the stock reverses and it goes all the way down, what do you do about that? At the end of the year, can I claim a loss? There's nothing in there about losses. Everything doesn't go straight up or straight down. So this is an untenable position that our President Joe Biden has envisioned. There's no reason for us to do this. We should do something simple. And I explained to you early on what simple means. Raise the tax rates back to what it was before Trump took off. Do away with some of the corporate exemptions and you'll have your money. You'll have enough money. Don't be trying to screw around with the tax rates and when you collect and when you pay and when you have to pay and when you don't have to pay. And there are many people who won't know how to do this entire thing. It'll cost them more money putting into the pockets of the accountants. And on top of all of this, an unrealized capital gains tax might be unconstitutional. So there's a big nothing that we're wasting a lot of time on. And I'll leave you with that this morning. I vote no on unrealized capital gains taxes. Have a great day. Bye.
Thank you.